Hello, today we'll provide a quick overview of the more important concepts regarding website development projects. Most nonprofit organizations know the benefits provided by an informative website. It provides exposure for their cause, imparts a sense of legitimacy and transparency, and explains the ways contributors can get involved. As a result, more and more nonprofits are finding ways to enhance their web presence by creating customized websites that achieve these goals, but also incorporate attention-grabbing, intuitive, and interactive design. The end goal is obviously to drive more traffic to their site and reach a broader audience that will provide additional support for their chosen causes and programs. As you're probably aware, it can be easy to invest significant amounts of time and resources into the development of a website, either through the use of internal experts or the services of outside professionals. But did you know that these costs may represent an asset for your organization? Let's discuss that further. Most are familiar with the concept of an intangible asset, but let's recap. The Financial Accounting Standards Board defines it as assets, not including financial assets, that lack physical substance. Some examples, probably more common in the for-profit world, would be patents, goodwill, business methodologies, or ways of producing a product. Some others that might be more common in the nonprofit sector, though, are trademarks, copyrights, software, and websites, which of course is our focus. The first step with website projects is to identify and accumulate all project costs. These can be internal and external. Internal costs could be direct payroll related to IT personnel or programmers. It could also be indirect costs that are reasonably allocated to the website project. External costs are typically payments to web developers and other vendors involved with the project. Once all costs are accumulated, the next step is to begin analyzing all the fees incurred and to make a determination if the costs will be expensed or capitalized. The determination of whether to expense or capitalize is a topic already discussed in FASB guidance, but before we go over the accounting treatment, let's first discuss the 5 stages within the FASB guidance. The planning stage consists of all costs incurred prior to the actual website development. This could include establishing goals, budgets, the website functionalities, as well as vendor research and legal fees. Application and infrastructure development refers to the cost to acquire and develop hardware and software that will run the website. Graphics development includes the underlying design and layout of the website, such as the background, the frames, buttons, and colors. All of these aspects of the site don't change when content changes occur. Content development can be thought of the actual data on the web pages, such as text, photos, charts, maps. Website content typically already exists in some form in some other location, whether that be another website or an organizational brochure. The operating stage generally occurs when all development is complete and the site is published. This stage also includes the training, administration, and maintenance of the website. Now let's get back to expense or capitalize. Costs that should be expensed include anything within the planning stage. Website hosting fees to third parties, typically incurred during the application and infrastructure development stage, would also be expensed. Content development related to text, pictures, and charts found on the website would be expensed as well. And most operating stage costs, including the ongoing fees and expenses that will occur as long as the site is in operation, the training, the maintenance, and registrations with search engines. Costs that should be capitalized will be most of the infrastructure and application development costs, such as hardware and software purchases. The graphic development, which is the underlying layout, frames, and buttons of the website, those would also be capitalized. And generally, the operating stage costs are expensed, as we covered. However, be mindful that new enhancements or upgrades to the site could justify further capitalization. Some other considerations include the amortization method, which is typically straight line, and a modest useful life should be selected due to the speed of technological advances. In practice, useful lives of 3 to 7 years are common. Vendor terminology is an area that can cause some confusion. Oftentimes, vendors use terms that don't agree with FASB language or are too vague without further vendor interpretation. The best advice is to work with your vendor and ask questions. Make arrangements at the outset of the project and outline the information the organization expects to receive for the various project phases. Another obstacle can be the allocation of project costs. In these situations, it may again be necessary to talk with the vendor to determine how the overall project cost should be assigned to each stage so the correct expense versus capitalization treatment is selected. This concludes our brief overview of accounting for website projects. We hope this provided a glimpse of the more important concepts and considerations. If you're planning a website project and want more information, or if you have questions about this presentation, reach out to us at Heinfeld Meach. Thank you. Have a great day.